What's going on, guys? How are you doing? My name is Shocks and this is ShocksCapital FX YouTube channel. Welcome back. Today we want to talk about a simple scalping strategy that you can use trading V75-1S. So don't confuse this with the volatility 75. This is V75 with a 1S in the brackets, right? They move different. So this strategy is for V75-1S, and I hope you will enjoy this one because it's a banger. So what we are going to be using is market structure and order blocks on the lower time frame, which is the M15 and the M5. So we're just going to go straight to the M5 and kind of see where we are going. So number one thing that you need to do is to find the easiest part of a chart where you can start your analysis so that you get the flow of the market. You get to know how the market is moving and where can you capitalize and how can you capitalize. So from what you are seeing here, we are just going to go as if we want to find a trade. So we start from here where you are seeing here and look out for what for these lines, because we'll be using these lines to mark out our order blocks. So number one, you have to study market structure and liquidity. So from what you are seeing here, price started here and it took out liquidity at this particular low when price struck down this low and went up like that. So there are two liquidity objectives that price was looking out for when it was moving in this direction. Number one, it was going for the liquidity that was resting above this above these highs, as you can clearly see, right? So these two highs, we had liquidity resting above these highs, right? Then we had liquidity resting above these highs, as you can see. So price tracked through this first pool of liquidity. So you have to know that when price goes through liquidity or grabs liquidity, it has to go back to an order block and retest as it goes to the next pool of liquidity. So the next pool is this one, and the pool that price just took is this one. So what are you going to do? You are going to mark your order block that is very clear in that area. Took out liquidity, or you could have used this one and took your entry here, but this is the best. Yeah, this would have been your entry, and this would have been your target. And we go on again and we look at what happened here. Price left this high, right? As you can see clearly here, left this high, dropped down, hit an order block again and went up, left another high. So this now becomes liquidity, as you can clearly see. But before we go there, we will clearly see that also that this was also liquidity that was taken down here. Price took liquidity at this low, right? Took liquidity, went to to an order block, retested this order block, as you can clearly see, then went down, took out liquidity in this area. You see that those lows that you see in this area, price took those lows right down and went retested another area of demand in this area, right? This is also liquidity. So you see price went up, left a third high in this area, left a third high, and this is liquidity being trapped at these particular highs, as you can clearly see. So price struck through, took out all that liquidity, and it left this low, as you can clearly see. This was the low that price left. This low is sell side liquidity, as you can clearly see. So what are you going to do? You're going to mark out this order block and you're going to take this trade. And what are you targeting? You're going to target liquidity on these highs, as you can clearly see. So this is the high. As soon as it takes liquidity, you are out of there. But do you see that we have been building liquidity on this on these particular lows, as you can clearly see? So these ones are triple lows. This is trapping using a trend line here. So this is liquidity. Price takes that liquidity, and if price takes liquidity, you know that it will leave an order block, as you can see in that area. And as you might well see, took liquidity in this area again below that low, and we were targeting that price might get as low as this low, but it didn't get there, so that's fine again. So what you're just doing is you're just following price, right? You're just following price. Liquidity here what do you see? You see price taking out liquidity again above this this high, right? Price retraced, and we wanted price maybe to get to this to this order block here, but it didn't get there until here. So this was also liquidity that was being trapped here on this on this trend line. Price broke through that and retested this order block, and as we go, so when price takes out liquidity retesting an order block, it leaves another order block. So if I have to tell you guys in like in a step form that you can follow when trading these things, I would say when price takes liquidity, you get ready to trade the order block that it would have left behind, right? So this is liquidity, trend line trapping, trend line phantom, right? So it breaks that trend line, retests an order block down here, but it has to leave an order block if it takes liquidity, and it has to have these little order blocks in this in this area. These order blocks are for liquidity trapping again. So when it gets to this OB, it goes down, and you can clearly also see that this was also liquidity resting, and price just came and retested that tiny order block that price did there. So these ones are are continuous order blocks. They are not life changing, right? You need these ones that are taking liquidity and leaving some behind. Those ones are the ones that are going to change your trading game, that are going to change your life. You see what is happening here? I want you to clearly see that we have double bottoms here, right? These are double bottoms, and that is liquidity. Price takes that liquidity here, and do you see what happens when it takes liquidity? What does it do? It leaves an order block behind. So this is the order block that price is leaving behind after taking that liquidity. So what are you going to do? You are going to be taking your trade at this particular point, and that trade is going to be super nice. Why? Because it had some liquidity that was taken just before retesting this order block, as you can clearly see. So what are we doing? We are continuously looking for these pockets of liquidity and order blocks. We have this liquidity resting in these lows. So this is sell side liquidity. Price breaks through and leaves leaves an order block, as you can clearly see in this in this area. This is the order block that price left, right? And price goes, takes all the liquidity that is resting in this trend line phantom thing, and this is what you are doing. So what you are just going to do is to identify liquidity and wait for retest. So if you can clearly see in this area, we did not have anything that is worth our discussion or worth our time, so we'll go straight to this channel that price was forming. So this is the channel, as you can clearly see. This was a trend line that was being used to trap liquidity in this particular market, and price just tried through it and went down. So if you want, you can use this as your entry point when you are going down like this, but I prefer order blocks. So I'm going to explain how you would have used order blocks to take advantage of this channel that you see here. You see, this is an order block, and where is another order block? This is another order block, another order block, another order block, as price is going. So if you consider this with price action, you clearly see what is happening. So this is another order block that price left, and what do you see here? Break of trend line, and what did you do? We left another order block. And what did you do here? We left another order block. This is on the M5 volatility 75 index. If you want on in the action, this is how you do it. And if you don't have an account to do this, the links of the brokers that we use are in the description down below. If you want to trade currencies, you have to make sure you have an account with Quick Trade. If you want to trade volatility 75 1S, you have to make sure you have an account with Deriv. The links in the description down below. Make sure you are part of the action, and make sure you do practice this knowledge that I'm giving you, so that you go in knowing what you are doing. I'm Shocks. I'm out. Trade what you see, not what you think. Hands to the head. Salute.
Introducing Deriv, one-stop shop to trade Forex, stocks and indices, cryptocurrencies, commodities, and derived indices that include but not limited to Volatility 75, V100, boom and crash indices, and many more. And to top it off, you can trade 24/7. Weekends are for trading. Deriv is one of the biggest online brokers in the world that offers the following: synthetics, CFDs, multipliers, options. To millions of consumers who have registered all across the world, we provide CFDs and other derivatives on currency, stocks and indices, cryptocurrencies, commodities, and derived. Simple, flexible, reliable. Pick from 8 effective platforms that were each created with your needs in mind. To benefit and be part of this, go to ShocksCapital.com and click Start Trading, or click the links in the description and pinned comments.